Welcome to Impact Investing, brought to you by the Supporters Fund. From the most sunniest days a year, coffee center of the country, Marseille, France. I'm your host, Jeffery Potvin, and let's please welcome from the city built on gold in 1897, from Willow, Alaska, United States, our guest, Bryan Emerson from Starlight Capital. Welcome, Bryan. It's a real pleasure having you join us today.
Hey, JP, great to be here. Thanks so much for inviting me.
I'm really excited about this conversation, not because we've had to try a couple times to make this all work with travels and everything else going on in the world, but you pretty much are running such an awesome show that you've been in this industry for, I think it's 20, 25 years now. So you're kind of like a pinnacle to how all this investing started and where it's been going. And there's so much learning that we're going to gain from you today because, again, when you're in the trenches this long, you're going to have a lot of good insights on what makes a successful company and what are the areas that people tend to falter on and don't really pay attention to when they're running and gunning their business. So before we dive into all that excitement, we'd love for you to share a little bit more about your background from your MBA days all the way across to what you're doing today. And then one thing about you that nobody would know.
Okay, great. Thanks, JP. So I guess the short story is when I graduated with my MBA in the mid 90s, some friends had put together bought a little shell company for 20 cents a share with the idea of doing a roll up of Latin American telecom providers. So I moved to Mexico City for what would be 3 years. And at the end of the 3 years, we had six companies in the firm doing about 150 million a year. The stock was trading about $24 a share. So I had the good luck of cashing in before the dot-com bust. And I moved back to Houston, Texas. And at that point, I did two things. First, I started angel investing. And second, I started a small investment bank, a FINRA registered broker dealer. And so those are the two things that I've been working on for the last 23 years. The short story on the angel investor group is now we're up to about 30,000 members in our network. We funded about 600 million over the years, and we now meet each month on Zoom. We get probably somewhere between 500 and 1,000 members, and we pick six companies to pitch to us. And then from the investment banking standpoint, I had sold my firm a few years ago, but still have all my securities licenses and tend to work on helping small public companies that need 20 to 40 million in equity. So that's the real short story of my business background.
I'm not sure we should do it any justice by doing it short, but we'll let that go and we'll start to peel into that because that's pretty awesome and pretty exciting. And it's not, and I guess the reason why it fits that category of being uh, awesome is because I'm not sure where it came across your mind to say, "Hey, I just built these companies. We rolled up six companies, and now we're diving in and we're going into angel investing." 23 years ago, angel investing was, very thin. Like everywhere, there was very few. From my recollection, I started working in this space 20 years ago, plus years ago, and there was very few. Like it was very refined on who you were going after and the types of people that would be interested in. I heard so many great stories over the years of. The angel investors that were investing at the time, and it just seemed kind of ad hoc. It was meeting in a coffee shop and the person's handing a check for 20 grand and that was your investment, and it was kind of like not structured the way it is today and the way it's been done. So I'd love to kind of peel back onto what got you involved in this, but before I do, one thing about you that nobody would know.
So the one thing that not many people know is a few years ago when the kids moved out, my wife and I retired to our lake house here in Alaska, and we just love being surrounded by the mountains and get outside and enjoy the fresh air. So there's a little tidbit for your listeners.
I love it. And the outdoors are the best. In the more recent podcast that I was doing, it was with a lady investor out of Germany. And I find that Germans are the best. And I'm going to compare it to the Canadians and now to yourself that just love getting outdoors and exploring and just being part of that. So I think that's exceptional. It's pretty amazing.
We love it.
So to take a layer back to where this all started, and I love the story that you started off at 20 cents a share and you kind of just started rolling up companies, and then within 3 years you're doing 150 million. Incredible. Can you share a few tidbits on what created that success? Was it an area that nobody was doing anything in? What kind of got you interested? And what I also love about this story is that you were all in. You moved to Mexico to do this. It wasn't something that you just thought took lightly and said, "Oh, I can do this at home," or "I'll just go do this in Texas." You literally picked up and rerouted yourself to a whole new area and dove right into this. What was kind of the impetus to this? What drove you to say this is important and I know this is going to be successful? And what got you there? And maybe there's a couple things you can share to the audience on why it took what it did to get you to make this big leap.
Yeah, you bet. Well, I think the old refrain is appropriate here. A rising tide lifts all ships. This was a time when MCI had been battling against AT&T for a while, and the telecom markets were starting to open up worldwide. And I just happened to be in the right place at the right time with the liberalization. And I can remember back in those days, if you wanted to make a call from, let's say, the US to Central America, you're probably paying one or more dollars a minute to AT&T for those international calls. Well, as things started to open up and there were more competitors in the market, and there were options like prepaid cards and dedicated lines, we happened to be in the right place at the right time and put together this team so that we dramatically lowered the cost of international phone service, and we were able to benefit from that. That's so I would say for anybody who is looking to create a unicorn, there are these things that come around a couple times in someone's lifetime where they're the game changers. Where whether it's now the AI or other things that can, social media some years ago. Those are the things that if you happen to be there at the right time, you can really do well.
And what's really cool about this is that you were able to pick up on the trend and then you moved to Mexico, started to roll these companies up. What kind of gave you the idea that this business was the leader or the driver to make this happen and it wasn't just a whim and you weren't going to get crushed by AT&T or one of the other dominant players?
Well, right. So my good luck started probably 10 or 15 years before as I was getting ready for what would be a fun ride. So in college, I had spent my junior year living in Spain. So I came away from that speaking Spanish real well. I then went in with a telecom company that was starting to dabble in different areas, and I set up the first prepaid phone card from Latin America. So I kind of had an idea and started to see these things take shape, started to build my network. And then when we were ready to hit it, when I got out of my MBA program, then all the everything was there aligned and ready to go. So it took a lot of preparation, and I happened to be in the right place at the right time. So I think for those of your listeners who are working hard and building skills and talents and abilities, those can pay off at the right circumstances as they find those types of opportunities.
I love that, and there's a couple things that you mentioned there. The biggest one is that you started to building your network. So going back that previous 15 years, there's a great podcast out there by Jordan Harbinger, and he's always talking about build your network. This is how you have to build it, and he gives a lot of cues on how to do that. And he's one of the top 1% or 3% of podcasts downloaded. And his whole thing was building that network. Now you're going back 30 years ago and saying, I was already building a network and I already had mentally sorted this out and started to grow and get into these areas. And then the next thing that kind of supported that was the language. You started to pick up on the language, which, of course, if you start to learn that, you've got some of these key metrics that are going to really help you move into Mexico and start to dominate in a market. One, you can speak the language, and two, you know the culture. And three, you've got that focus and you're hitting that runway of a brand new company. So taking that energy and that drive that you're going after, did it help that you had this MBA behind you? Was it a supporting feature that gave you the confidence, or is that just another tool in the tool belt that kind of helped you move forward?
It was hugely beneficial and helpful. I learned so much in the MBA program. I think going into the MBA program, I pretty much knew everything about business, and of course, I learned so much more and how to think in different structures, There's so many different areas of an MBA that I was able to get involved with, as anyone does who goes through those types of programs. There's a lot you're going to come away with, so you have just more tools in the tool chest. So when you come across maybe an HR problem, you kind of have some initial ways to think about, well, how would I look at that problem? New ways to employ technology. Okay, again, you look back to your toolkit. What do you learn? What are some of those authors that you read? How did they, with the case study method, what were the cases you saw that worked then? And so you wind that in with your experiences and your intellect, and hopefully it helps put the puzzle together quicker. It certainly did in my case.
Oh, that's great. So it starts to unfold and you dive right in. Now you're kind of shifted. You're perhaps you were doing some entrepreneurship before. So what kind of intrigued you to take the dive into entrepreneurship world versus staying behind a big corporate, or what kind of drove you into this new, I guess, portion of what you were going to do in business? And what were the lessons that you gained from that 3 years? Because it's rare to see a company go from zero to 150 million, which is awesome. So, what was some of the learnings that you gained from that?
Well, I guess I could go deeper about my entrepreneurism. I mean, I can remember when I was uh, I don't know, in fifth or sixth grade, I started shoveling snow in a suburb of Chicago and earning money so I could buy a better bicycle and these kind of things. I remember in seventh and eighth grade, I bought a snow cone and cotton candy machine and went around to all the fairs in the Chicagoland area and started really making quite a bit of money as a young person. My parents would drive me around and in the family station wagon, and then in high school, I started buying some trucks and started an asphalt maintenance company. I think I ended up having about a dozen trucks and 2 dozen laborers, and most of them spoke Spanish. So I was kind of learning a little Spanish back then. And I had a software company I ran for a while, ended up selling 2 branches of my asphalt company just after college. So I ran that through college. So I had a taste of entrepreneurism and selling 2 companies, albeit, very small. But, I think that kinda lit the flame for me that I really wanted to be more in an entrepreneurial setting than I did in a big company. I realized there were a lot of people that start with a big company route, especially after business school, and learn a ton. So it's a different skill set that they pick up and a different set of tools, and, depending upon your situation, they can all work out great. I just happen to try to put myself in a situation where I can best use my skills and abilities.
I love that. And it sounds like because you have this background of entrepreneurship, that it kind of led you this way no matter what. You were kind of built to be an entrepreneur. You started at a young age and you kind of made your way through. So, taking the learning that you gained from getting these businesses to 150 million, was there any clean takeaways that you said, I'll do this better next time, or I need to focus stronger on these areas maybe I wasn't as strong on? Is there something that kind of helped you on your next build out?
Absolutely. Yeah, I think when I transitioned to angel investing, I looked at a lot of what I learned, and there were a lot of failures and missteps and broken fingers along the way, and that I didn't want to repeat. And I think one of them was invest in the jockeys, not the horses. Meaning, I started looking for the best management teams I could as an early angel investor, more so than the business model itself. Because whereas, consumers change, business plans change, the markets change, you don't really want the people you write the checks to change. And so I really dug in to understand who are the people running these startups or these early stage companies, and are they the ones that I want to be with, for the long term? And clearly there were several investments that went down the drain. They were learning experiences, but I think the idea of really focusing on, can this manager or this founder or this team take it to the next level and beyond, I think was something that I learned. The human element is was very important for me.
And when you take that human element, and I'm assuming that you imposed a lot of this even in your own businesses when you started out and now taking them forward. Have you kind of looked at it and said, well, if I'm an early stage investor, a lot of them don't have the opportunity to build the right team. So are you kind of pushing for them to layer in the right team, or at least plan ahead on who they need to be in that team in order to make sure that you're willing to invest, because not only do they have a strong maybe one or two people, but you know that they're going to grow into a better business because of the founder unit that they already have?
Right. Now, I would say typically before they would, uh, hire a lot of folks. In my case, I was coming into companies very early stage, maybe one of the first investors at a small amount. So I would probably want to make sure that that founder had a minimum viable product and that there was some acceptance in the market. And it was probably the next round, which would be the first venture round, that would have the kind of money behind it that would be able to allow them to staff up once they've proven out some of those initial markers that I wanted to see. So I help fund the very early products, and then let the next group that was even more capable fund the build out of the staff.
Well, that makes sense. So taking this earlier, almost like an oracle on figuring out what new techs, what new products, what things would have that possibility of succeeding. Is there kind of any, I wouldn't call them war stories, but are there any things that you predicted that would become huge that maybe didn't make it in time and have now come out today? You know, like way ahead of their time. Like it could have been a product business. Maybe Google Glass was out 20 years ago and it just didn't kick it and it didn't make it to market. Is there anything that you kind of that you were almost betting on that the future should be buying into this and it didn't make it because the future just wasn't ready for it?
Well, I'll have to admit that one of my biases was to try to invest in telecommunications. The problem with that is that there was so much deflation and the prices were going down so quickly. You have to scale up very fast, even on a thin margin. And, you might have to have some intellectual property protection or some kind of an unfair advantage to really beat out everyone else. So it was a little bit of investing on a treadmill where even though I could try to find some good niches within telecom, it was just so brutally competitive. So, for instance, I can remember investing in some very early stage telecom equipment companies where somebody had invented something in their garage. And I can remember there was this fad of auto dialers. So I don't know if you can think back to that time in the, you know, I guess mid 90s roughly or so, where to get along, if you didn't want to use the phone company that came with your service, like AT&T, then you would have to dial typically a long code to then route you over to a long distance provider, and people just didn't want to dial those codes. So these auto dialers came up, and they were very profitable for a little while, meaning in the like a year or two or three, and then of course all that was automated, and you have to go to the next one. So I also remember investing in Linux, thinking that was going to be huge, and of course Linux has done well over the years. But I invested with a small team that was focused on Latin America, and they had some inroads. The company was sold, so I probably broke even. But um, that my investment in Linux in Latin America didn't do as well as others. But I did try to build upon that experience when I went further to learn certain lessons, like how long do we think this market's going to be viable before it just gets swamped by competition. And of course you had talked about the infrastructure, where way back then there wasn't a lot of infrastructure for angel investors and entrepreneurs, and now it's just incredible, the sophistication out there between incubators, accelerators, angel groups. Capital is much more efficient and much more efficiently applied today, which is great. But there was a lot of lessons along the way, but it was fun partaking and learning of them. So that technology driver is a tough, steep curve, but sometimes you just have to invest in several different, hoping that the one will be the unicorn.
It sounds like, and there's a couple pieces I'll unpack there, but it sounds like even 15, 20 years ago, that the game was still speed. It was still about taking this product and getting it into market as fast as possible because you're going to have competition and you don't know where it's coming from, but it is smart to move quickly. And would that also set up for an acquisition quickly as well? Like, do you see that? Has any of that changed over the last 20 years? Are companies staying around longer trying to generate more revenue because they are the incumbent in the space? Or is it changed and they're all just as much in a panic mode to build and sell?
Well, I think everybody wants to be first, and they're in a panic mode to build. But then, the day comes for the vast majority. Is it time to sell? Is it time for me to merge with someone bigger, or, take some chips off the table? Because again, the odds are against any one company being the next unicorn. And, there were quite a few stock certificates that I've got that I can use to pay for a room with that didn't go anywhere. But there were others that were acquired that went on to do real well. And so I would say that maybe 10% of what I invested in did well enough to cover up the losses for the others and then some.
That's great. So if the game is still build and grow and scale quickly, and that hasn't changed over the duration of 20 years. There is a bigger difference that's changed, which is there's a lot more companies coming into the space. There's a lot more people looking to build entrepreneurship style lifestyles, and there's a lot more dollars coming into the market. So, are you feeling today that the change really is more around the amount of money that's being poured into the space than it was 20 years ago, and that the talent is also improved? Or is it kind of all work itself out again? Like, there's no difference from 20 years ago to today. It's still run, hustle, grow, and sell.
Well, I guess the message that I've learned on my investments have been, what is the smart money for me to accept as an entrepreneur? And so, what I've been doing for 23 years in the angel group is trying to connect entrepreneurs with the venture funds that will fund them a few years in the future by twisting the arms of my friends that run those funds to see if they'll invest now as an angel. Because if you can find, six potential venture funds that you want to receive money from in the future, and you can get their principals, owners, or managers to put in a small amount of money now, you probably don't really have to worry about raising money going forward if you do things right. And so the idea of really choosing wisely your capital sources and what do they deliver? Can they do the networking, leverage their networks? Because they've been out doing what they do successfully for maybe several decades. So let's piggyback on them. Don't reinvent the wheel. And so I think understanding what that money source will deliver for you in your specific firm is the most important uh, aspect that I found in this in early stage investing.
Now that's very valuable. That's a very good insight that if you can get the people later on that are going to come in at a larger scale, if you can get them in coming in for something a bit smaller into that phase, they can learn their way through. And then when they decide that you're doing the right things, check their KPIs and it matches to what they're looking for from a scalable business, then there's a
Mhm.
higher potential that they'll want to keep investing to ensure that business grows. So it's a smart way of looking at it. And I guess as a founder, you may not have experienced these things. So you may not understand when you're first going into market as a first time founder how you're supposed to approach investors or the types of investors you want to get in with. So I guess you can learn from your fellow startup founders and how they approach it. But this sounds like a pretty viable solution.
You're right.
So
There's so many
you
options.
mentioned
It's really overwhelming for the first time entrepreneur to raise money. Again, online sources for connecting entrepreneurs and angel investors and networks, and it's really confusing. So hopefully, entrepreneurs will get some good advice from their trusted colleagues, and find the right people to get on their team.
Agreed. You mentioned one other piece, which was about the like staying viable. Is there kind of a window for this? Like, there's the flashy stuff that's just happening that's kind of fly by night, but may carry on for a year or two. Is there something where you're looking at trends that you're trying to decide how and will this company become a commoditized product so that it will be around for 20, 30 years? How do you kind of look at a business today versus what you used to look at and say today, this isn't just a fly by night thing. This is something that people are going to need in 10 years. Do you have some metrics on how you look at this as not being a one-off type product that no one will ever come back to? Have you built any KPIs in your own system to make sure that the companies you're throwing in front of your investor group have that longevity and potential for scaling?
I wish I were smart enough to know the answer there, but I'm afraid I'm not. There's so many good companies that I've seen that didn't get funded, and there's so many lousy companies that did get funding. Um, and it's really hard to tell who the winners are going to be. From my standpoint, I'm probably focused a little bit more on the singles, in the sense that if I think there's an area that's good, maybe I have some insights on telecom or communications in general or some other area, then then I'll say, okay, let's get to first base. Let's get our product up. Let's make sure we have enough cash in the bank to be able to come back and fundraise another day, because most companies run out of cash and they don't get to first base. And so if you can get them to first base with enough cash there to help have someone else get them to second, that's a win, because you're buying more time on that option for there to be value, and they might have developed enough to sell what they have at a premium, which is great. So in terms of the final, huge unicorn, the next chat GPT, it's hard to say, but getting them to first and second is something I think most investors could probably work on and help with and run the numbers and get them to that next base.
Is there any stories or companies that you mentioned, of course, that have won and the ones that have failed, etc.? Is there any companies that you saw in the past, and it could be at any point in time, that you really felt they had a really unique opportunity and a great product, but unfortunately, the rest of the world just couldn't catch up to where they were from an innovation standpoint?
Yes, I think certainly at the time I had mentioned that company that was doing Linux in Latin America, and it just seemed such a slam dunk. I'd spent years in Latin America, and I realized a lot of monopolies existed down there. There were a lot of opportunities for startups and software. It just seemed to me as though it was going to work. And I think one of the problems is there were such entrenched distribution channels down there in many different fields that to break out of those was extremely difficult. And in hindsight, it probably took, decades to do that in many fields. Another example within telecom, I remember going down and offering big discounts on comm equipment at one point in my career that seemed like a no brainer. But these firms that installed this telecom equipment had such alliances, and sometimes through marriage and blood, that no price discounting was going to have them change their suppliers. And so it took in that case it took a lot longer than I thought. So that was one where I just was more optimistic. I probably had my North American hat on, that surely this is better, faster, cheaper. Everyone's going to realize that, and know that there are human networks in place that oftentimes supersede that.
And that's super valuable that you share that because this is commonly in Japan, it's the Kuritsu model, which is the businesses integrate and invest in each other so they float all their boats, so they all work together. So if one goes down, they're picking each other up to continue to grow, which means that when someone tries to come in and sell to one, they have to sell to all, or they all dismiss it as a value. And to your point, this is very entrenched in other countries and other regions that we sometimes don't think too deeply about. We think that, hey, we're offering the best value, it's the cheapest product for the best price, except for all these things, or vice the other way around. But we don't think about the human network. And you kind of really define that it's super important. And I always say to founders or to anybody when it comes to investing is you got to figure out how to make other people money. And if you can't figure out how to make other people money in the chain, which is all the different layers of investing from seed up to series D, E, and vice versa, they got to figure out how can your product get in and help these people and make them money. If you're just going in there trying to crush everybody, eventually you're going to hit a brick wall because people realize that this isn't going to work. You're going to kill four other businesses, you're going to affect the bottom lines of these companies, and then they just choose not to want to work with you. So you have to really envision that, yes, you can make a change in cost and you can make a change in plan, but there has to be a better way to ensure that all the incumbents still can make their money and still make their value, if you're going to squeeze into this new model or to this new business line.
Exactly. I completely agree. Yeah.
It's almost that there's a learning that needs to shift in the mindset. When you talk about change, change is the hardest thing for people to really grasp, because change is very threatening to a person, to anybody really. So it almost feels like there should be a course just in how do I integrate my company into a space, how do I get people to get behind me and support me, and then how do I make sure everybody finds their balance in making money and all those good things that come with supporting a business along the way.
That's right, and we can't underestimate the uniqueness of culture in a business, because businesses do have different cultures, maybe some for the better, some for the worse. Um, and we've talked about that geographically in different countries, different parts of the world. So try to look at the culture if you can. I know it's very difficult, especially if you're maybe new to business, you're a younger person, maybe you haven't had the chance to look at other cultures in depth, but really try to ask people either in that business, if you're applying to work for a startup or an early stage company or any company, what's the culture like? What do you like? What you don't like? Do your due diligence. There's a lot of due diligence out there, just on the internet and talking to folks and reaching out to them through social media. So learn all you can. I think that's another one of the big changes that's happened over the last few decades. People will share information with you oftentimes if you ask. So get all the information you can as quickly as you can.
No, very well shared. There was kind of, you mentioned when you were talking about your shift and changing into another country and doing these acquisitions. Is there any advice or anything that you learned by doing that? Because again, you could have run it out of the US, you could have run it anywhere. And I come across a lot of companies when they're talking, they share things like, I'm having a tough go in my country, but in my head, I'm thinking, man, this would be a perfect fit for the Philippines. Why don't you go sell it there? Do you ever make recommendations on where a company could be better fit to see if that's something that's of interest to the founder and how driven they are, and say, if you go there, then we'll make an investment because we see that there's a bigger window here for you? Like, is there that kind of ideology that gets built into the investing side as well?
Yes, and I think there are 2 big aspects to it from my standpoint. The first is obviously the quantitative, meaning, can we get our prices down? Can we get the product shipped out cheaply enough or delivered electronically? Um, so the quantitative is pretty easy to figure out, a lot of resources. What's a little bit more difficult is the qualitative. In other words, by having, my luxury brand based in Thailand or wherever, does that connote a higher quality? Does it connote that you're living your dreams and aspirations in a way that's going to make the product seem more genuine and more easier to sell? And so there's a story behind most successful brands. And the idea of passion and what you were meant to do is important. So if someone says, I really wonder if I should go to, say, the Philippines to start this call center. One of my questions would be, well, have you ever been to the Philippines? Do you think do you know anybody there? Have you ever traveled there, vacation there? What happens if you get there and you hate it or you don't like the food or the people? So my going to Mexico, I think, was a little bit passion based in the sense that I had gone to Latin America a lot. I did like Mexico, like the people, the food, the culture. And so there was a little bit of me that said, I'm going to probably go through some difficult times. And I think of those 5 times that I went to the hospital because I got, food poisoning or drank the water or ate those great snacks off the food vendor on the sidewalk. But I wanted to be there, and that gave me more motivation, more inspiration to power through the difficult times that you're inevitably gonna find. So passion's a part of it, and I think people need to answer the passion question. Joseph Campbell talked about following your bliss. So that's something someone might read up on if they have an inclination that being in a different place of the world might somehow help them or their business.
I love that. Follow your bliss. I think it's a good motivation, and it's a good way to look internally to figure out where you want to go and what's going to motivate you and drive you. And if being away and building something all on your own by yourself is a motivation, then take it and run with it and find the supporting networks, to your point earlier, that can support you while doing that. So build that network right away. Start talking to people, sharing what you're doing, and kind of build on it from there.
Yep, that's right.
I love it. All right. Well, we're gonna shift pace because I think we could go all day. I literally have a billion more questions on the experiences that you've had and all the great things you've done. It's so amazing what you've gone through. And I guess maybe what will before we shift into the 60-second rant, the question I'll ask is, what's the toughest lesson you've learned as an investor?
I think the toughest lesson I've learned is when to quit. In other words, I'm a glass half full kind of guy, and I want to ride something to the end. But I've tried to set a goal that if an investment or an experience reaches that goal or exceeds it, I need to start thinking very seriously about, is it time to cash in the chips? Because I've set that goal. Um, and, I had an incredible experience back in 2013 when someone who owed me $350 said, gee, I don't have the cash, but would you mind if I paid you 1 Bitcoin? And I thought, what's this Bitcoin thing? And I took a flyer and I said to myself, once that Bitcoin gets to X, I'm out of here. It just looks, like a fly by night thing. Well, anyway, I ended up selling that Bitcoin for $12,000. It went way beyond my expectations. But I think you should have something in mind as to when it's time to get out. So I got out too early, but it was a good ride.
Well, I think from your increased percentage, I'm sure you didn't you got out early based on where the market sit today, but at the time, that
Yeah.
$12,000 probably made you another 50,000 somewhere else. So I think it's how you evaluate, to your point, the exit side of it, and I think you had a great increase, and it's really how you did the next investment from there and how it benefited from you. So I'm going to say it was successful all around. So that's a great way of understanding, even as an investor, we have to set goals and lines so that we know where our thresholds are, and where we're willing to accept failure or where we're willing to accept our wins. And I think that makes a really big difference for yourself to reduce your own stress, but also to build excitement in the wins that you do gain and take your wins when they're there.
Yep.
I love it. All right, we're going to go into the 60-second rant. So the way this
Okay.
works is that you've got 60 seconds. You can rant about anything you like. I will work my best to put in one rebuttal, and then you can close it off. I will let you know at 60 seconds that you're at 60 seconds. I will also share that this has never happened. Everybody goes at least 2-3 minutes because the rant is that good. So I'll let you rant, and we'll go from there. But you let me know when you're ready, and I will start the clock.
I'm ready.
All right, you're good to go.
Okay, my rant is on renewable energy. The good news is that my house is off grid and we have 10 solar panels and a wind generator and a battery bank. So we live by renewable energy. It's great. We are talking right now on yesterday's photons. The bad news is it's not always reliable. There are times when we get several overcast days. I've got to go start the gas generator. So whereas I think this is a good solution for people who can deal with intermittency on a personal level, I'm afraid I don't see it working out on the level of a country or a huge area. We see what's going on with problems in Texas. We see that, Germany's committing suicide, but with this intermittency problem, and they're having to go back to coal. So a lot of the wind projects that were offshore are now being deemed unviable without huge subsidies. So I think people should look very carefully about renewable sources, and will it work for them? I hope it could work for everybody. But will it work in the larger picture and for countries and the bigger scheme? I'm not so sure. There's my rant.
I love it. So my I'm heavily supporting, but I'm also going to counter for a second. Is there a way to balance these out where you're having renewable and you're having some form of backup storage, if it's microgrids, whatever that might be, so that it has become a global impact where in a country, everybody's committing to the grid, everybody's utilizing this renewable energy, so you're getting backup storage, you're not having to run generators. Is there a way that you can have all of these different energies operating from nuclear, if you have to have a little bit of coal, whatever those pieces are, that all kind of collectively work together? Because I do know that in the US there's so much conversation around companies starting up building grids and then not doing anything with it, shutting down and failing, and leaving all of the homeowners with all of this storage that they're not using and then can't access it, and they got to pay thousands and thousands more to get access to it. But then on the other side, you've got in South Africa where everything is battery backed up. So your lights are ready to go no matter what. So there's so many different ways that we're trying to tackle this, but it seems to be convoluted and not really one easy structure so that can support you so that you don't have the intermittency. Is there a way that can support that or no?
I think so. I think on the national level, and I am no energy engineer, expert, technologist, so it could very well be that some technology will be developed tomorrow that will make all this moot. But I think given the technologies we have now, I think probably nuclear is going to have to be the lowest carbon, most efficient way to run a country or a nation. It I think it converts something like 90% of the energy basically carbon free. And so, if we want to have grid scale energy, I think it's going to have to be nuclear. On the other hand, I think everybody needs to learn to deal with intermittency. If you look at all the people around the world and when they need energy, we don't use much energy when we're sleeping. Okay. I realize that our refrigerators and freezers are going and our clocks are being powered. But for the most part, and certainly in the third world, intermittency is something that we all have to deal with. I've had to deal with where I am. Do I want to run the generator another hour? Or do I want to go, read a book or, read some cached material that I downloaded on the internet? I can kill an hour doing that. I don't need to have it up 24/7. And I think the more people around the world, especially in first world industrialized countries, realize that they can be fine with intermittency because they're not having to pour molten steel 24/7, then that's going to be their solution. They're going to find renewable sources, and it's going to help them economically as well as psychologically. And we're going to do just fine with a little intermittency.
Well said. I love it. I do agree. I think that's the middle ground is the intermittency, but it's also figuring out how do all of these technologies operate and coincide together to be able to build that intermittency and reduce the latency, but keep it to a value that allows all of us to function and still feel that we're part of the fast moving world that we're in today. But I do agree there's got to be a balance, and well shared, well shared.
Thank
All
you.
right, we're going to jump into The business questions. So these are from the viewpoint of yourself as the investor. You choose one or the other. Rapid fire. Here we go. Founder or co-founder?
Founder.
Unicorn or a 4-year 10x exit?
The latter.
Tech or CPG?
Tech.
NFTs or Web 3.0?
Web 3.0.
AI or blockchain?
Blockchain.
First time founder or second, third time founder?
Second, third.
First money in or Series A?
For me, first money in.
Angel or VC?
Angel for what I'm doing.
Okay. Board seat or observer?
Board seat.
Safe or convertible note?
That's a tough one. I'll go with convertible. I
Lead
like
or
to set up
follow?
a series of options, so that's an option value for me. Go ahead.
Fair. Lead or follow?
A lead.
Favorite part of investing?
Helping mentor the founder or management team.
Love it. Number of companies invested per year?
Probably 2. I just don't have the bandwidth for more than that now.
Okay. Verticals of focus?
Verticals would be anything in communications, um, maybe some things related to social media. Um, and I'm a junkie for just about any business plan. Love to look at them and critique them, but for me, I probably stick mainly with something related to communications.
Okay. 2 qualities for a startup to stand out to you?
One is that the founder or the fundraiser is willing to sacrifice something personally, some kind of skin in the game. And number 2, that they can show me that they have done that in the past with the goal that they've wanted to achieve personally.
I like that. That's a good option. Proving yourself along the way, right?
Yep.
What is the piece of advice you give founders 9 out of 10 times?
Do your due diligence on the people that are looking to fund you and make sure you understand them, their value proposition, how they make money, and what they're going to bring to the table. And make sure you put some clawbacks in there if they don't deliver.
I like the clawbacks. I like all of that, but certainly like the idea of throwing in the clawbacks. That's brilliant. Do you have a philosophy or any rules that you stand behind?
I would say the one that keeps coming up most for me in the back of my head and among my fellow investors is invest in the jockey, not the horse. It's really about the managers and the founder
Okay,
and the team than the technology or the business itself, at least at the very early stage.
for sure. Who is your hero, mentor, and why?
Oh gosh. There's so many that I think back on. I would have to say my hero is Don Quixote. He's up there with his lance and going after the windmills, and that's me trying to maybe change the status quo and kind of conquer the Goliaths. And a lot of times it doesn't work, but I'm with Don Quixote.
I like it. What line do you find you share to investors over and over?
Do you know the person and the company you're investing in? Again, all about due diligence. And if they don't deliver, claw back.
Okay. If you could change one thing about venture, what would it be?
Hmm. Hmm. One thing about venture, I would say continue to be open to as many people as possible. I think it's gone from a little bit more insular model to an open model, and I think that continuing of opening is important to try to give as many people as possible at least the chance to pitch and be heard.
I like that. Double sided question. What is your favorite and potentially your toughest investment?
The
And you
favorite
don't
you
have to
mean
say
in
names,
term
just
so I guess my favorite type of investment is the one that I know best and I feel that I can control. The downside of that is that's the only industry or model or set of circumstances under which my wife says I can lose money.
fair. Hey, you have to have your guardrails and your rules to keep you moving forward, so that you don't get carried away, right?
Yep.
Okay, personal questions.
Okay.
What is the most famous person that pops in your mind?
Most famous person is Alexander Hamilton. He's the namesake
Okay,
for
first brand that
my
pops in your mind.
college, Hamilton College.
Ah, I love it. Okay, first brand that pops in your mind.
Nike.
Book or movie?
Movie. I just saw Police State. It came out and it's a scary look at someone's version of the future. I hope it doesn't happen.
All right. Uh, Superman or Batman?
Batman.
Fortune cookie or birthday cake?
Oh, birthday cake, and I hope it's chocolate.
5 minutes with Bezos or Oprah?
I'll go with Bezos.
Okay, mountain or beach?
Oh, definitely mountain, no question. I'm not a beach person.
Bike or run?
Biking, yeah, especially if it's a fat tire bike.
Big Mac or chicken McNuggets?
Big Mac.
Trophy or money?
Mm, I'll go with trophy at this point in my life, but it generally was money, so I think I'll stick with trophy now.
Okay. Beer or wine?
Oh, beer. I'm a home brewer.
Oh, I love it. TED Talk or book reading?
I'm a video guy. TED Talk.
Okay. TikTok or Instagram?
Instagram.
Facebook or LinkedIn?
LinkedIn by far.
Favorite movie and what character would you play?
Favorite character, I would say that I would have to say When Harry Met Sally, and I'm Billy Crystal.
I like it. I haven't seen that in a while, but it was a good movie back in the day. Favorite book?
Don Quixote. I did my senior thesis in college on it.
Okay. Favorite sports team?
Favorite sports team, I would have to say the Niners at this point. 49ers.
Fair. They did okay. They did okay.
Yeah. Yeah.
We're almost there. What is the meaning of success to you?
The meaning of success is waking up in the morning, having a goal, a good goal, a worthy goal, and accomplishing it. I realize that's very small, but in the big scheme of things, if I hit my daily goals and enjoy what I'm doing, the big goals will fall into line.
I like it. What is your superpower?
My superpower is my wife. We we've been married 21 and a half years and are completely in love.
I love it. That's a fantastic superpower to have. Great team.
Great team.
Well, I want to say thank you very much. Oh, go ahead. Go ahead.
No, please go ahead. I misheard something.
Well, I just said to you, I guys had a great team, and that's what makes a big difference. So having that support and to be able to go out and challenge the world and having the support behind you, and that doesn't matter if it's husband, wife, or family, friends, or anything in the world. I think what you're doing is fantastic. You've built out a massive network, and of course, being able to help all of those founders with the investor community that you've built is the same thing as you mentioned with your wife, is having that support. So it makes a big difference in any founder to have that support behind them, and every little bit helps. So you're crushing it. So keep up the amazing efforts, and thank you very much for all of your time today, Bryan. It was great to get to know you and to share and learn. I've taken lots of notes, and you've got a lot to share, and I'm sure there's way more that we can dive into. But I'd like to say thank you on behalf of our community for joining and sharing. And the way we like to end our show is we like to give you the last words. Anything you want to share to the investor community or to the startups, I turn it over to you, and please let people know how they can get a hold of you.
Well, JP, number one, I want to return the thanks. I've been following you for a long time and have seen, excuse me, a lot of your interviews. So impressive. You've built an incredible network. I'm so glad we hooked up, and I'm sure there's a lot we'll do over many years. So thank you for all you do for the entrepreneurial community. Um, let's see. My website is starlightcapital.co, and I have my contact information there. I am a sucker for business plans and helping early stage companies. I give a lot of free advice. They don't have to accept it, but I always love helping out where I can. I love giving back. So, JP, thanks again for your time today. It's been great. Look forward to our keeping in close touch. Bye bye.
Likewise, thank you. Okay, that was a great conversation with Bryan. Fantastic. Like, all the years of experience that he has in the investment world really makes a difference, but also his entrepreneurial journey, because he started off taking risks. And that's what it is all about for entrepreneurs. You know, he mentioned some great stories of when he was a youth and the things that he did. But as he progressed through and he took that leap of faith and went to Mexico, he had a lot of background there already, but he still took the leap. And, you know, some of the great things that came out of the conversation was building that network and building it up right away when, early on. You never know when that network is going to become important and have some value in your business or in anything you do. It's the people you go to school with in college, university, high school that become leaders 10, 20 years from now. And those people to build those relationships with are going to make a big difference in the future. Some of the other points that he touched on, set goals and achieve them, even if it's daily goals or weekly, monthly goals, but setting those goals and going and achieving them. And also the same thing for your investments, so that you know when to exit. Take the money when you have it, take the value and move on. I think we forget that we're always going for this big payout, when at the end of the day we could lose it all or we could just gain a little bit. And I think we have to realize, what are we willing to gain and what are we willing to lose? And there's a fine balance there. And he really staged that well on putting that together. And then, of course, understanding the qualitative and quantitative side of business and risk. Those are some other points that he made. And then I like the idea that what he looks for in a founder is that they've got skin in the game. What have they proven in the past that they've gone above and beyond to make something work? What did they do to challenge themselves? What did they give up to lose in order to gain something better? And learning those things are pretty cool, because it's the same thing he did by moving to another country to build a company. Same concept is, what are you willing to do to make this work? Because those are the people you want to invest in. So thank you for joining us today. If you enjoyed this conversation, please feel free to share with your friends, subscribe to our YouTube channel, or please follow us on Spotify, Amazon, and or Apple. Feel free to share an audio clip or video clip around our show, and we may include in a future podcast. If you can find us on all social platforms, including LinkedIn, at Supporters Fund, your support and comments are truly appreciated. Please visit us at supportersfund.com and or startup events at openpeoplenetwork.com. And thank you, and have a fantastic day.